The CRA has updated the 2026 tax brackets, which means you as a Canadian are going to be paying less tax this year. Hi, my name is Janine Rogan. I'm a CPA and financial educator in Canada, and I'm here to teach women how to build their wealth so that they can live their richest life. This year in 2026, there is a permanent tax cut to the lowest tax bracket. So in 2025, we saw about halfway through the year lowering that lowest tax bracket from 15% to 14%, which means we had this like weird blended rate that ended up being about 14.5% for 2025. So let's break down how much money you'll actually be keeping in your pocket in 2026. In 2026, the lowest tax bracket is going to be at 14% for the entirety of the year, which means you'll pay just 14% federal tax on the first $58,523. Now, of course, this does not include provincial income taxes, and this amount will differ obviously based on which province you're living and working in. That $58,523 threshold is slightly higher than the around $57,000 that the lowest tax bracket threshold was in 2025, which means that again, you get to keep more of your income earned in that lower tax bracket. We do want to remember here that in Canada, we are taxed on a marginal rate. So that means that first $58,523 is taxed at 14%, and then the next dollar is going to be taxed in the next income tax bracket. So if you earn $58,524, you will have just $1 of income that is taxed in that next tax bracket. I think this is a common misconception, but some people misunderstand our tax system, that if you earn into the next tax bracket, the entirety of your income is taxed in that higher bracket, and that is not the case. So in this instance, you would just have that $1 that is taxed at that higher income tax bracket federally, and then you would have that $58,523 still taxed at just 14%. Now, one thing to note is that the tax brackets in Canada are indexed to inflation. Now, this is good for you. What this means is if inflation goes up, which in general it does every single year, then the tax brackets actually increase the amount that it takes to get into the next tax bracket. So we have seen inflation of about 2% this past year, which means the threshold to move into the next tax bracket is going to be about 2% higher. So as I mentioned, that first tax bracket is at 14% federally and is for income you earn up to $58,523. The second tax bracket is for income earned above that $58,523 all the way up to $117,045. And this income is taxed at 20.5%. The third federal tax bracket is taxed at 26%, and this is for income earned from the $117,045 to $181,440. The fourth tax bracket is income earned from $181,440, and this is up to $258,482. And this tax bracket is sitting at 29%. Now, anything you earn above that $258,482 is going to be taxed at the top marginal rate. In Canada, federally, this is sitting at 33%. So if you earn $1 more than that top tax bracket, that $1 is going to be taxed federally at 33%. And based off of inflation this year, that top tax bracket has actually increased by about $5,000. So you can earn up to $5,000 more before you actually get pushed into that next tax bracket. So based on your income, you will be taxed across a number of different tax brackets, but then we get to use something called the basic personal amount, or the BPA. This amount for 2026 is $16,452, and that is the amount federally you're able to earn tax-free. But There is something worth noting. There is a slight clawback on the basic personal amount if you earn over $181,440. So once you start earning above that amount, the CRA will claw back the basic personal amount. So this is just decreasing the amount of tax-free income you get to earn. And by the time you hit that top tax bracket, this amount is reduced to $14,538. So if you're in that clawback zone, then your average tax rate is going to be slightly higher. So let's actually put this into practice and let's look at an example of someone earning $100,000. Now, this person is earning their income in 2026, and for ease of math and because I live in Alberta, we're going to pretend that this person also lives in Alberta. So the first $58,523 they earned is taxed at, you guessed it, 14%. This means they'll pay $8,193 on the income that they earn in that first tax bracket. Now, the next amount of income they earn falls into that second tax bracket, so they'll be paying 20.5%. And the amount that they're paying this on is $41,477. That means they're going to pay $8,503 on the income that they earn in the next tax bracket. This means in total, federally, they're going to owe $16,696. But of course, we have to look at the provincial amount that they are going to be taxed on as well. Now, the tax brackets in Alberta are a little bit different, and they are going to vary based on what province you live in. The first $61,200 that they earn in Alberta will be taxed at 8%, which means they'll pay $4,896. The next $38,800 is going to be taxed in that second tax bracket that sits at 10%. This means they'll pay $3,880 on the amount in the second tax bracket. So their total tax burden for the provincial portion is going to be $8,776. Now, of course, this is before any deductions or any credits that this person might have in the year. So in total, they're going to owe $25,472. But of course, we mentioned the basic personal amount of $16,452. And instead of taking home around $75,000, when we include this amount, you'll be looking at taking home closer to $77,000 in the year. So it reduces your tax burden by around $2,000 in this case. Now this, of course, is not taking into account things like EI and CPP. And again, there are lots of different tax credits that many different people can use to lower their tax bill throughout the year. In 2025, this tax bill would have been about $400 more. So reducing that lowest tax bracket down to 14% is saving someone who earns $100,000 about $400 per year on their tax bill. Now, this of course is not a substantial amount of money, but it might be something that you could put towards a savings goal or invest it back into your RSP to take a further tax deduction and lower your tax bill further. So of course, there are lots of things that you can do to lower your tax bill throughout the year. RSP contributions or first-time home savings contributions, donations, medical expenses, moving expenses, tuition are all things that add up towards credits that you can claim on your tax return. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. If you have any questions about tax brackets, you can leave them in the comment section below, and I will see you next week.